And Tim's on mute, so welcome out, Halftime Crew. You know what that sound means. We got myself, we got Tim, we got Noah. Tim, how are you doing today with your mic on mute?
Well, I don't know. Maybe I should stop out on this microphone. I have my laptop because my desktop is in the shop, literally. And so I'm working from a little bit different interface today, but thank you for catching that, Cody. That's teamwork to make the dream work, my friend.
Man, that's a lot of rhyming you got going on there. Laptop and the desktop and the shop, dreamwork, the dream work.
I'll rhyme laptop with laptop. Does that work as well? Can you use the same word? Does that hit rhyming rules? I'm not sure.
That's what the rappers do. They make
I'll tell you what, the market is not rhyming. Red candle, green candle. Here we are backfilling and literally getting back everything that it sold off there yesterday after the Federal Reserve. Let's just start big picture here, guys. Jerome Powell's testimony. Cody, I know you were day trading it. I know that you were sitting there watching the market and going through it. What was your reaction to Jay Powell yesterday, Cody?
So initially I was just annoyed just because of the way the rate cuts went. But as he started talking, I could tell that he still had a little bit of his hawkishness, that he was sticking to it, and the fact that he was pointing out all the weakness globally. He was recognizing that our economy is strong. And then he was making the statement, and it's probably the biggest headlines we'll see today, is that he was stating that this is not a signal that we are going into a rate cutting cycle. He was saying we are using this to use as a safety measure for global weakness and economic downturn, but this is not signal that we're going to keep cutting rates down the road. And after his speech, he kept being asked, like, well, how are we going to know? And he's like, well, we're going to look at the data. There's no data out right now. I'm not going to tell you I'm going to cut rates when the data is not even out yet. Mm-hmm. And that was one of the things that people didn't want to hear. They wanted to hear that we're moving in rate cuts and they're going to cut back to zero. Jerome Powell, I don't think ever wants to go back to zero because that's not really a responsible thing to do. So that's basically how it came out all around.
Yeah. Noah, did you come away the way the rest of the market did with a lack of clarity and who knows what they're going to do next? I mean, that was kind of my impression here.
Yeah, to me, it seemed a little bit like a temper tantrum from the market, not getting what they wanted.
I saw you tweeting about that. Yeah.
Yeah, for sure. And as soon as it broke the intraday support, I bought some puts. By the time it was hitting the lows, I had adjusted them into spreads and it ripped back up and I didn't care because I had no risk in the trade. So I was just watching the market and kind of like, and I watched it overnight and I'm thinking this is going to recover because they still cut rates, right? I mean, they gave us a rate cut.
Yep.
I don't think that's going to do anything negative to, well, maybe it hurts the banking sector, but outside of that, I think it's more bullishness. And so, big bullish engulfing candlestick today is not terribly surprising, but it did put me on high alert and I watched it overnight to see if it was going to continue down. But by morning, I felt pretty confident it was heading back up.
Yeah, no, this morning I was even telling Cody that, about 8 o'clock in the morning, my time, Mountain Standard Time, I started putting on some day trades to the bullish side because once we got through the manufacturing data and the market was clearly going up, it felt like a rally to me and here we are. But it doesn't give you much clarity from an overall perspective, Noah, because now the patterns are changing a little bit. I mean, if you look at the trend, the pivot relationships, which is really what pattern recognition is all about, they're now rolling into a sideways pivot. I think one of the best things we could do for people here today is do a full multi-time frame analysis on the S&P. Go back to a weekly if you would, because the market is still bullish. Tomorrow we're going to have our report. We're going to have our meeting. We'll probably back off of our rating, but we're still near the all-time high, 3008 after a Fed meeting and an interest rate cut. So we are still in a bullish run. Noah, are you still bullish?
Yep. Look at that from the monthly perspective. It's still trading above those all-time highs. And it just did a little retest. It poked its head up, came back down, retested off those monthly highs, and it's still showing some bullishness. And, this is a little bit more volatile than the pattern you saw back here in 2015, 16, where you got some, big whipsaw and then it broke out to new highs. And I think that's about where we're at now. Back it out to a weekly time frame. Let me switch that back to a weekly. And again, it's got a little slowing momentum out here at the top, little chop, but it's still, again, above those resistance zones, and the long lower shadow off the rising moving average has got a sign of bullishness to it. Again, don't see a problem here. It's maintaining closes above the high. If it breaks back down, of course, that changes the story. But in the meantime, little panic selling off of the Fed meeting. And again, I watched that sell off intraday, and it seemed like a bit of a shoving match between the bulls and the bears. When it broke the support pivot right here at around 29.67 or so, I thought, oh, that might, carry on through. It's a big support resistance zone, but it just tested it and it poked down a little bit, and then it started to recover. So when you break this down into the intraday patterns here, and let's see, I'm on 5 minutes. Let me back that out to 10 days, 30 minutes or so. You can see the immediate response to the Fed. And it was a bit of a shoving match, came down, put in those lows. And then again, overnight, it drifted back up, put in the higher lows and consolidated sideways into the open this morning. And then boom, it's been pretty much off to the races since the open. So,
yeah, we got a little pullback on the intraday developing here from a short-term perspective. We got about 3.5 hours left in the market. Usually some theta type stuff is working here. Bring up the VIX right now real quick, if you will. I thought the VIX was really interesting yesterday as well.
Well, I thought it was interesting too.
Yeah.
If anyone took the advice yesterday and bought things on the VIX, they were happy, because before the show started, that thing was sitting, $14 by the time the show ended? Yeah. $13 or so. Ended at 16.
If you've been halftime crew for a long time, you know why we don't watch the VIX every day, but that's an old story and a fun one to tell. But Noah,
when we do bring it up,
I think there's an important reason. Explain what you're seeing here, Noah.
Well, the VIX is referred to as the fear index, and what it really measures is it measures the implied volatility on the S&P 500 stocks. And when the market started selling off, lots of stocks started selling off. You go look at all those S&P 500 stocks, a lot of the big conglomerate companies, et cetera, they sold off intraday, and that raises concerns for traders. Fear starts to increase a little bit, and option premiums increase to compensate for the expected volatility. And so that measure of implied volatility rises, and they call it the fear gauge. Again, it's just telling us that, hey, people got vigilant and it popped up. Now, that being said, it's right back down with the market, rallying back up. It is negatively correlated to the market. And, the VIX doesn't never really behave exactly as I expect it to, but it's not too far off at the same time. It does pop when the market drops. So anytime you see a market sell off, you can expect the VIX to rise. And anytime the market gets really top heavy, the old saying in the market, when the VIX is low, it's time to go. And what that means is it's, you're looking to take profits because the market's had a good run and lead to complacency. And, fear is at a very low when the market's been running, very strong. So you look for the opportunity to buy insurance while the VIX is really low because the options are cheap. The implied volatility is not priced in as much on those options. And so the premiums are more affordable.
Yeah, there's no doubt about it. And so when you're got a low VIX, you want to go long options, talk about hedging and whatnot. I know Mark came in yesterday, was talking about that with the Bear Market Survival Guide Mastermind group, but that's for insurance. But when the VIX pops, you then sell options and then you fade it off. Go down to an intraday on the VIX. I want to show everybody something here really interesting. 15-minute would be fine, 30 minutes, something like that. And you'll notice most days on the volatility, it might pop in the morning and then fade all day long. Okay. Like Monday, it popped the first 3 candles. So for the first 45 minutes, then it just faded. On Tuesday, it popped and then just faded. And then on Wednesday, it popped, faded until the Fed meeting. Now that's a unique one because the Fed meeting during the middle of the day is one of the only economic reports of its kind in the middle of a market day. But now all day long, you see the VIX just fading. That's where theta comes in, selling options, selling that volatility and taking advantage of that, Noah. There's a lot of ways you can trade this stuff when you understand what the strategy matrix is trying to tell you. And falling volatility, it begets bear call, bull put, iron condor, naked put, things like that. So that's where we are on the Theta Thursday. Give me a quick rundown of all the indexes. Dow, we already looked at the S&P, Dow, NASDAQ, and the Russell, and just give me a read on those, Noah.
All right, we'll start out with the Dow. And the Dow, a little bit sharper sell-off. I think out of all the indices, it looked like it sold the hardest. And then again, it came down into that known support resistance zone. And if you look at this is a really good example of just technical support resistance bounces. So, you can see the old resistance zone back here and boom, it's right in that zip code. It's came in and I didn't draw that very straight, but it's right in there. And again, now you're showing a bullish Harami candlestick. And if it can clear that overhead resistance, I think we'll actually see the benefit of the rate cut. Now, I was wondering if the rate cut had already been priced in, and when the market didn't get more than the quarter point, I think it was a bit of a, like I said, temper tantrum, but it's recovering. We still got a rate cut.
Mhm.
So Dow looks pretty good. Let's check the NASDAQ real quick.
I want to add to that real quick is that I absolutely think it was baked in. And I think that's why you had so many people screaming for 0.5 because the 0.2 was already baked in.
Because we're already
Now,
baked in, yep.
with the board of the Fed, you actually had two dissenters, two people who did not vote for the cut, and they were both voting for no cut. There was no one on there that actually voted for 0.5 point cut. The only place we were hearing 0.5 cut was the media and people screaming for it to happen, and they weren't doing it from any fiscal reason. They were doing it for one reason, and that was just to let the market continue to run. And that's not the healthy reason to cut rates. That is completely the irresponsible thing to do. And frankly, I think with the 0.25, that's as much as we got. And the rest of it, I think we should let it run fundamentally and not inflationally.
Mm-hmm. Do you think it was intentional by Jay Powell to try to bring the market back, or do you think he fumbled this? Going into the press conference, I mean, was his intention to leave the market with a lack of clarity yesterday? No, I can't imagine it would have been.
Well, I didn't really give any clarity. And I think that that's maybe sometimes their intent with their language is to not give actual direction. I think their language is always a little bit confusing. It's always tempered a little bit where they say things like, cautiously optimistic. Well, which is it? Are you cautious or are you optimistic? Mm-hmm. In this case, they sounded somewhat dovish, but somewhat hawkish at the same point in time. And I do think it was a mixed message, but it did clear out the market. I think it ran a bunch of people's stop losses. And, I think here the opportunity to buy the dip was the message, I think, coming out of that, because at the end of the day, still got that rate cut, and it will cause asset prices to continue to rise. Mm-hmm. The longer that we have that rate at that, that rate at that rate. Doesn't make sense, but hey, does that count for rhyming this the same word?
I don't think he fumbled. I think he was very intentional in his language, and I think the purpose of his speech yesterday was to basically say, like, yes, we cut. We're using it as a hedge, for lack of a better term, and we'll cut in the future if it's warranted. But as of right now, no, we did what we had to. And the way I like to think about it is, do you want the Fed, if think about it, if you're driving a car, do you want to be all brake and then all gas and then all brake, or do you want to be able to ease back and forth? And I think that's kind of what he was trying to say, is like, a cut was needed, so we gave one cut. But we're not going to just start, destroying and going into a cutting cycle, because it's not needed right now. The economy's strong. Mm-hmm. So I think he was very intentional in his language, basically stating, like, adding a little bit of not confusion, but pulling out the idea of, exactly what we're doing. He's like, you don't, because we don't know the data in the future, which I think is a good thing. And he also kind of separated out the rumor from the action. Mm-hmm. So I think he was intentional in what he did. I don't think he fumbled. I think he did it purposely.
Notable leadership in tech, by the way. We're here on the NASDAQ. Give me a quick run through on some of these symbols here, Noah. Microsoft.
NASDAQ looks like a very strong recovery.
I love it. A breakout on the NASDAQ would put it number one for me.
Yep.
There's no doubt.
I've been watching Microsoft because I've got, in full disclosure, I got some bullish activity on that. Mm-hmm. And I think it's got a very strong candlestick. That's more than a piercing line candlestick. It's not necessarily a Harami type candlestick. It actually is closed above. And anytime it goes and covers more than 50% of the previous down candle, they call that a piercing line. Mm-hmm. So you got nice, strong bullishness just off of those all-time highs. And I don't see that all-time high as a major pivot. At this point in time, it's still a minor pivot point. Just happens to be the benchmark high, but it's still a minor pivot. So I think its ability to blow through that is strong. They got their dividend coming up, and then their earnings is forecasted out. And I just like Microsoft as a company. They've almost convinced me to switch back from Mac to PCs, just because they're actually creating stuff. Some of the other producers are not.
Yeah, they're doing some amazing things. Other leadership in Intel, chip maker here.
Boy, we looked at a lot of those yesterday, right? We looked at all the semiconductors, and man, that's not a good looking bullish pattern. I don't know what is that. That one could go in textbooks.
Yeah. Bull pullback, pivot, confirmation, green candle showing a run here. I'm seeing that across the chip sector, by the way. NVIDIA, Avgo, Texas Instruments, they're all looking pretty good. But look at Adobe real quick. Software companies are starting to move for me as well.
Yeah, Adobe's nice little pullback, kind of a rounding top pullback, piercing line type candle again, and just needs that confirmation. I'd like to see it clear those moving averages.
Mm-hmm. And then the biotech sector is very, very green today. Some of those companies are difficult to trade, but Biogen, one of the biggest in the world, is showing me some leadership here today.
What is that, BIIB?
Mm-hmm.
Yep. That's I like that. I like this for filling its gap. This is really knocking on the door of the resistance of that gap. And if it breaks up, you got a cup and handle over here. And if it breaks up, I think that's got a really good chance of rising up to meet that falling 200.
Yeah. Coach Mark talks about clear air, between moving average pockets. And if you do break out of that resistance, you got a lot of room to run there. So there's some leadership. The stock market obviously today is up and everything's kind of running, and go find your favorite bulls because there's plenty of them that you could get behind. There's no doubt about it. Let's move on and let's kind of go through all the commodities as well as the currency markets. Give me the $DXY again. I know we've been talking about currency markets, talking about everything that's happening, but I think we have to go through this chart, because a breakout
you
of
have
that
to point out the
level
breakout
was significant.
Boom. I mean, look at that pop in response. Now that's one that's interesting to me. Just you get a rate cut and then the dollar just pounces, just rallies. And then, you got it, putting in a big shooting star, evening star out there at the top today showing it's going to retrace. But man, what an interesting pop on a rate cut. And again, I think that weak dollar policy, what we were talking about yesterday, I think helps strengthen your GDP. That's the goal, right? And so that's what I think the market's rallying off of. And bam, I mean, I saw Cody tweeting about his euro dollar trade. I'm sure that went really well for you.
Oh my God, I was day trading this thing like a fiend and tweeting about it the entire meeting. I was on Twitter on one screen and day trading the other.
Yeah, and Adam brings up a really good quote here from Jim Rickards, and you guys know who Jim Rickards is, Currency Wars, Death of Money. Adam, I just got that book that he just wrote delivered to my house yesterday. What's the title of that one?
Aftermath?
Yeah, Aftermath. It just came out in July. We're going to make that the book club next read. So we're going to have a book club in September, Aftermath from Jim Rickards, if you guys want to read that along with us. And Adam says the currency war started in 2010 and are still going strong. That was Jim's tweet yesterday during the Powell press conference. And I agree with that 100%. A lot of this is currency relationships and currency wars. Cody, the Fed cutting, obviously you're a hawk, you don't understand it, but in the context of them just competing with other currency markets, does it make
that makes sense? Yeah, no, that makes sense. So from US economic standpoint, doesn't make sense at all. From a trading standpoint, to use as leverage in that aspect and to add some devaluing, that doesn't make sense. So whether I agree with it, but trade what you see.
Yeah. Market doesn't care whether you agree with them or not. They will move where they want to. And currently the dollar's looking really, really good. That candle up there is not great, Noah, but from a back and forth perspective, maybe that old resistance point would come into play. There's a lot of currency relationships. Cody, you eyeing any of the Forex pairs specifically today?
I was actually just about to answer that in the chat because someone had just asked me. I got my eye on the euro dollar cross pair right now, and that's mainly just because that's the number one traded pair in the world, and it's the one that I traded yesterday during the news event, and I'm waiting for it to give me some intraday signal that I can get back in, because I've already traded it, cashed out, went to bed, and what I did was I actually set up some entries just below yesterday's low, which should actually trigger me in before I woke up this morning, and then that candle's kind of moving intraday against me, so I'm looking for it to set up to where I could actually play it as a reversal or play it to the downside. So go ahead and move to an intraday for me, Noah.
Yeah. Here we are in an interest rate cutting cycle, and the dollar's rallying, the stock market's rallying. What are the commodities doing? Give me crude oil next, if you would, Noah. Let's run through them all one at a time. Crude oil, gold, silver. Silver had a notable pullback. I want to talk about it. Break these down for me one at a time, if you would.
Yeah, well, crude's coming back down. We were talking about it being in the middle of the range and up above all those moving averages, and it's coming back down. It looks like it's testing down below those now. Again, we both kind of agreed that we had a slightly bearish bias on that. And today's candlestick kind of puts me back on that slightly more bearish holding. It needs to, violate those moving averages and support for me to go full bearish. But my seasonal expectations are down, just from a seasonal perspective. The chart still in a consolidation.
Mm-hmm. Yeah, back and forth consolidation, leaning on that side of it. I'm on the fence on this one though. So even if I do lean on that side of it, I still got one leg firmly on that fence, waiting for a break up or down one way or the other. Crude oil kind of back and forth. But then gold and silver, which I have been bullish on with most of the market, kind of anticipation of upward moving prices. That a lot of that was based on the Fed, maybe the dollar coming down at some point. It does beg the question. I don't think we can talk about it too much. Can the dollar rally and gold rally, Noah?
Yes.
Yeah, they can.
Yes.
Yep.
Yep.
Yeah. And here we are. Green candle is holding. Now the dollar broke into a new high, and here gold is at a multi-year high as well. That is really, really impressive if you think about it. Held the 20-period moving average. Green candle today fighting off the sell-off, kind of an upward wedge there. Give me a look at silver if you would. Silver has been one of the favorite commodities people have been tracking here recently.
Look at that shadow.
Man, break that down, Noah.
All right. So you got sell-off here, coming down into a big support resistance zone and extending down into that rising 20-period moving average, and long lower shadows like that. I think that shows a sign of strength right there. It sold off, people bought that dip, and it hasn't given us a full-blown reversal yet. But you take that intraday, and there's no doubt that that's back in an uptrend. Look at that down here on the small intraday chart. Like, that's no longer in a downward trend cycle. It's reversing. It's heading back up. Mm-hmm. So, that's the idea. If it continues to put in higher highs and higher lows, that's just a big old fat pullback. And I think it'll continue on up with the price of gold. Now, how much bullishness, again, rate cut, I think does help the precious metals. So you might want to see it clear yesterday's high. But other than that, I think it's a pretty solid signal.
Yeah, I agree with that. And a quick look at Bitcoin, if you will. Let's make sure we're always got our eye on this one, see what's going to happen. Dollar rallying, probably not going to be great for Bitcoin in general. And the old
let's see if the old BTC,
holding. That 10K is becoming such a psychological level where it's just holding and hanging around. The longer it does, the better, in my opinion, for this. Is it commodity? Is it a currency? I think they call it an asset from a tax perspective over on the SEC and the IRS. So whatever you want to call it, hanging around 10K is a good thing. It's playing defense here the last month.
Yeah, no doubt. It's definitely a strong price zone for it. And again, it's kind of still holding that consolidation pattern, but that double bottom, shows signs of strength. And if I think we see it clear that 20-period moving average up at 1100, I think you're going to see another run back up to those highs.
Interesting chart. There's no doubt about it. Some earnings roundup I want to take a look at. Qualcomm first. Disappointing guidance, but you got to like the candle battling back. It's nowhere near a trading signal at this point. I do like it when I see this kind of stuff to do iron condors on Noah. Post earnings gap down, backfill, so I'm not getting some runaway gap one way or the other. And now we're in the middle of a range. Now that's an advanced strategy, but I do like those kind of instincts. I have not run the number on a condor. Click on the Analyzer Trade tab. Give me a quick look at this. I want to see what my ROI would be. We are Theta Thursday here, Cody. Post earnings plays. And either Noah is frozen or I am frozen. C'est la vie. Double check. Cody, did Noah freeze out on us?
Looks like Noah just froze out. I was just about to go get a refill and coffee too.
Oh, no, I'm glad you heard that. Go ahead and grab that screen and bring yours up if you would. He is frozen in time. Yep.
It's okay. The Man Frozen in Time. That sounds like a book title.
It does. Yeah, I think a stitch in time, right? That's what they say, Jonathan. If you make money on Bitcoin, they're going to they call it that you had asset appreciation and capital gains on that. In fact, I saw a big thing from the IRS saying that they're going to go after people who did not pay their taxes on their cryptocurrency gains. Yep. And Marie has a good point while we're here, while we're hanging out. We got 50 people here live. If you're watching our show right now, take a moment, give it a thumbs up, and let us know that you are here and appreciate it. Let's rock and roll.
All right, where were we before we lost Noah?
We are going on to Qualcomm. One thing I like to do as a part of my routine about midday, actually after the halftime report, is I start pricing theta spreads. And when I see a gap, there's an opportunity, okay? And especially with the volatility cycle, selling off volatility after a post gap is something I'm interested in. So the earnings roundup kind of gives me ideas to run with, Cody. And when I see a gap down, hold, backfill into a neutral range, I'm now reading that as neutral. All right. So I would go into the analyze tab or the trade tab and consider pricing an iron condor. And why don't we go out 50 days? Yep. September monthly options, get the liquidity. And let's go low delta. What's the ATR on this?
ATR on this is $1.72. No, wait.
That's on the hourly.
Yeah, that's on the hourly. $2.
Let's try to get about 10 points up and down. 8 would be fine. 4 ATR would be fine. But let's see if we can get 10 points. Now you're in the trade tab. Do the analyze tab.
Oh, touche. Mm-hmm. All right. Let's see. 10 points up and down. So we want to do the 60.
Not going to
happen. We want to do 5 point or 10 point?
7.5. 67, 50, and 80 or 65 and 80. So do the short 65 strike, long 60 strike.
All right. Noah just texted me and said his entire system went down.
That's okay. C'est la vie.
And you said the 80 to the upside.
And 85. Make sure you get 5 points on that side too.
There we go. Got what did I do there? That's what I did. I was like, wait, that doesn't look right.
Yep.
That's a condor.
That's exactly right. So $1 credit on a 5-point window where you get 3.5 market maker move, what you'd want to do. And if you're out there and you're watching right now, it is Theta Thursday. And these are kind of things that you learn to do as a trader. Somebody put in tackle Theta spreadsheet, okay, in the chat. Let's make sure we do that. And in the clubhouse the other day, I was asking our traders, which of the spreadsheets do you use? And some of those people don't use them yet, and I'll tell you, that's very, very important. That might actually get.
That is one of the most powerful tools as a new trader you can have, guys. Download that spreadsheet and use it to build your trades, and it'll help you understand whether or not it's a good trade, a risky trade, a rewarding trade. Download that spreadsheet, because at first you have no idea, whether it's good or not. You don't know the risk in it. As a new trader, everyone does one thing. They look at the money. They're like, oh my God, look how much I can make. But they don't know how much they're risking. They don't know the spread on it. They don't understand if it's a good trade or a bad trade. And that's probably more important than the profit itself, is the risk and the allocation needed to make the trade. Download those spreadsheets, guys.
Cushion chart credit. We'd want to run the numbers on Qualcomm. Earnings gap backfilling into a neutral range makes it a potential trade there. You got to run the numbers, make sure it does qualify though. I keep running through some of these earnings roundups. Lam Research, LRCX back on the chart.
LRCX.
Beautiful.
Wow. That thing, if that thing maintains, that might be on the reports next week.
Yeah, you got to like an earnings reaction that's running into a breakout with a strong green candle up here at the high point. I love post-earnings plays. There's so many different ways to play them. Keep looking at Clorox next. Consumer staples were so strong there for a bit. Now
it's Clorox.
Kind of CLX.
There it is.
Yeah, dividend paying company that backfills in here. I mean, the only thing that you really would be interested in doing is something like a boomerang trade here. GM, General Motors.
GM.
Actually had pretty good numbers and breaking into a high point. Out of all the automakers, GM, Ford, Tesla, you name it, even the big ones, small ones in between, GM's looking as strong as the other ones, if not the strongest out of those bigger players. Western Digital, another chip maker, roundup back in the tech sector. WDC.
WDC.
Gotta like that breakout.
Yeah, I do like that breakout.
Earnings. There's always opportunities and ways that you can approach it and play it and all that kind of stuff. Looks like Noah's back in the chat on YouTube. That's fine.
Hey.
That's all right. Anybody want to sell me a Microsoft PC? You bet. Happy to do it. And, as I'm looking through the markets, kind of double checking things, obviously some interesting earnings reactions today, some other data that we're looking at. Earnings for tonight after the bell. Square, SQ.
I gotta adjust this. I'm just looking at. I got 2 volumes up on the same thing. That's just annoying.
That's okay.
No. There we go. That way we're not staring at two volumes. Hey, Noah's back.
There he is.
You're into the skid. That's all I got.
And before we look at Square, actually, there's a few other companies that I missed here, Cody. Look at Yeti, YETI.
YETI, Yeti.
Back. Not a good candlestick, but this is a growth stock. It's on a long-term, fundamentally strong watch list for me. I think you've got growth opportunity for years in front of us. Shopify, SHOP.
Sorry, I was reading the chat. Say that again.
Shopify.
SH. There it is. Shop. I'm being a terrible driver right now.
Juggernaut, maybe one of the strongest stocks in the market, just broke out of a double top after post earnings. Noah, that's an aggressive entry, but you got to like the fundamentals and also the technicals behind this company. What's your read on this one?
Well, I like the volume too. A close above resistance on high volume with a positive earnings outlook and clean break. Bam. You know, that's a hard signal to disagree with.
Noah, you're quiet again.
You're quiet.
W for Wayfair, really interesting company, kind of a growth idea as well. Really hot on the market there for a couple years. Not doing much this year, but earnings did hold the 200 period moving average. Just make a note of it. Tomorrow, we're going to have quite a few interesting companies tonight and tomorrow to talk about. We talked about Square. We looked at it. Pinterest, PINS, Cody, has earnings tonight. Recent IPO this year, one that I really like. It's been on our stock of the week club for quite some time, and it's approaching resistance heading into earnings. Just be aware of that. ExxonMobil, Chevron, some of the big names tomorrow also going to move the energy sector. Guys, that is our roundup of what we do every day in the market skyline. What we're going to do next is rapid fire. And Noah, while people pop their symbols in there, kind of explain what rapid fire is to our audience.
Hey, rapid fire is you pick it, you throw the stock symbol out, we give you our soundbite analysis on it. We like to look at those charts, and again, it's essentially quick chart read, and it's a great sounding board for you. So put in your ticker symbols. Don't hesitate. Don't be shy.
For a second, because I think Coach M's going to join us for rapid fire.
Is that right?
Yep. So just filibuster away.
Oh yeah.
I'm actually going to pass the screen back to Noah too.
Oh, are you now?
Yes, I am.
Hold on. I do not have a system loaded back up yet.
Oh, well then no, I'm not.
Yeah. What a fun deal. Coach Emily actually just took a trip to Africa, so she must be back. I saw some pictures online of her.
She was going to join us today, and she's like, yeah, it's almost midnight here. And I was like, we'll go to bed, and then sent me a message. So I think she's still in Africa.
Yeah, don't sweat it. We'll get her another time. Don't worry about it. Let's go through rapid fire here.
All right, let's do this.
Got a bunch of symbols. We're going to start youngest to oldest. Cody, you're first. Justin Driscoll, VLO.
VLO is hold on, nothing going on right now, even post earnings. It's neutral pattern until we really get a break. I would actually I have a line here at 88.50, but I'd even say it needs to break this mess. Earnings didn't really do much, so neutral chart, nothing directionally there.
Yeah, a lot of energy earnings are coming out here this week as well, but it did have notable strength against some of the other energy stocks. I got to tell you, there's some ugly ones in that sector. Big, BIG, I'll take this one. Steve, CyberSyn, Jacobs, and yeah, pivot relationship is kind of slowing some momentum in there, Noah. When you see that, you got a higher pivot low, but you got lower pivot highs. That moves into very complex patterns down here. Something volatility based here, Stephen. You've got the earnings coming up at the end of August. You got a low IV number, probably going to build into that. Actually, IV rank is still pretty high. Could even consider something bi-directional potentially. But yeah, be aware of that earnings, be aware of that pattern that screams certain types of opportunities in Vega. CSX we'll give to Emily here. Em, how are you doing?
I'm doing wonderful, guys. How are you?
Doing great.
How's your trip?
Wonderful. I'm exhausted though. Just came back from a 6-hour drive from watching animals in Masai Mara. So everybody's exhausted.
Yeah, I saw that video you posted of the hippopotamus.
That was funny.
That was funny. All right. What are we looking at here?
CLX.
Let's do
Oh, is that earnings already?
That's earnings that already came out.
Wait for confirmation. I think it's above those moving averages. I really can't see those moving averages because your colors are different from mine, so I don't know what it's sitting at.
That's a 200, that it's above the 200, it's above the 50, and it's above the 100, which are all kind of right.
Okay.
So wait for
right there.
Wait for something.
Yeah, wait a couple of days. Yep.
Yeah. CSX next. Actually, I was going to let you kind of just analyze that and realize it was wrong at some point there, Cody. That's okay. We'll get both of them in here. We'll get all the CXs in here. Any combination you can think of. We'll do Crocs next. Crocs is coming up next. CSX, Emily, what's your read here?
Big red candle today. I would wait for confirmation below what, 68-ish, somewhere around there, and enter there.
68, 69, if you don't care about that candle. Yeah, around there.
Yeah, very good. Pfizer, Noah, you're up. PFE.
PFE. I was talking about this the other day, and big drop there on earnings. Big support zone. This is one of those things where I look at this as a boomerang trade opportunity. You got a stock that pays a 36-cent dividend, now trading down near 38 bucks. That makes that dividend a lot more attractive. And if you're interested in getting into a nice dividend paying stock, you got to get paid to do that by doing the boomerang trade. So, Pfizer is the kind of company that long term you don't mind holding. It's really well diversified, relatively fundamentally strong, recent hit, but I think that brings the buyers in.
Sure. Is it Pfizer, Johnson & Johnson? Who's getting sued in Oklahoma by the state over the opioid crisis? Is it this company? Somebody, there's
Johnson. Sorry.
Yeah.
I was on mute, but J&J is getting sued left and right now. But actually, while we're talking about them, let's see how they're doing right now. J&J, looks like they're starting to get their legs underneath them.
Mm-hmm.
I've said it once I see some major support being formed is when I'm going to look to pick up some shares of J&J. I'm dead serious about that because I do not think the lawsuits are really going to affect them. They've been sued countless times. I even on this show looked up every time they've been sued, and every time they pay it out and they keep doing business. They keep trucking along.
Yeah. So, like the stubborn knob that you can put on your desk here, Cody, we're going to get you one, and you can just turn it every time we bring up J&J so that you can just entrench your opinion even further. I've heard it from a bunch. I am not saying you're wrong about this one, but I do think that you might be running into some opinion bias here.
Well, so the way I would look to do this would be something very similar to what Noah was just saying on Pfizer. Is if you could pick this thing up and boomerang trade at some lower levels, it pays a 95-cent dividend, and pick it up down here, sell some calls above it. That wouldn't be a bad trade.
Yeah. Trade what you see though, kid. You said it on Twitter perfectly yesterday. It was one of the best tweets I saw all day. You made money on the dollar, even though you didn't believe it. When J&J is a good buy, it will show you something in the chart.
Which is why I haven't bought it yet.
Yeah, that's right.
I have my bias, but I have not pulled the trigger because it's given me no sign to pull the trigger.
All right, young Padawan. All right, just teasing you here a little bit.
Underestimate my power.
ENPH next. Let's keep working through this one step at a time.
What'd you say, ENPH?
Emily, that's you with a little.
I muted her.
Okay. Why
did you mute?
Because you got some background noise.
Oh, I'm sorry.
Give it to Emily.
What am I looking at? Ooh, okay, wow. You've missed it, so wait for a retracement back down.
I agree.
That's what I would do.
Good enough.
Interesting. All right, C-Trip. Noah.
C-Trip. I'd like it above that moving average, that 9-period moving average. I don't know what moving average you got. Cody, could you add a couple more moving averages on your chart for me?
Sure. Which ones would you like?
Be really helpful. I like above that whatever color moving average you got.
Let's see.
It's all the same. There you go. I think the pullback there off of the support zone is not too bad. I'd like to see it breaking out above 40 and nice bullish trend forming. Patience if you want to wait to take out 41, but I think it's fine above 40.
You know, with all the moving averages, when they start becoming a soup like this, that just tells me that there's better things out there. When they're all nice and spread out, then I can use them better than when they're just this messy goop.
Yeah, could be. I'm going to take 5 in a row here and give me Facebook. I'm going to do a fast 5 in rapid fire here. Maybe I'll write some poetry later, Noah. I'm in a rhyming mood today. I don't see anything here that is of note. I think there are better tech stocks out there. It's riding down in between those MAs. In fact, it would be vetoed on the scouting report meeting. Momentum shift, a lot of different things happening there. I like tech in general. If the NASDAQ breaks out, Facebook probably will break back to the upside, though. So some mixed signals in there. Walmart, which I love the company. The sell-off in the market kind of broke the pattern down a little bit here. You got to like the green candle battling back, but now we're dealing with earnings. I probably would be on a pass at this point because it didn't trigger the way we wanted it. AT&T, give me T. Bob LeBlanc. What about Bob? Is that the best Bill Murray movie there is, Noah?
It's up there.
I think it's way up there.
Caddyshack's pretty tough to beat.
Oh, yeah, Caddyshack's got to be my number one.
Pay range up, Doji, not much here. Lockheed Martin.
Tim's trying to ring us back in from getting it off topic.
Love the fundamentals, double top and waiting for a breakout. Lockheed, if it does break, it does still have a trigger up there. AMD.
Ooh, AMD, which did not have the best earnings yesterday.
Dude, dirty, sexy money list type stock right here. Wonderful on the gap down to boomerang, Noah. That was an instant one. If you know you want to buy something and they gap down on earnings into an upward trend from a long-term perspective.
Throw some puts on there so fast.
Naked put. We talked about it instinctively yesterday as well. Ulta, ULTA. But you better, the key is on that AMD thing is you have to understand the boomerang trade. In fact, in the chat, just everybody type in the word boomerang for me real quick. That's an important part of that strategy. ULTA. And I can't look at the stock without thinking about Noah. So I got to kick it back over to him. Noah, this is one of your favorite companies because your daughters.
I thought you were going to say he's like, wears beauty products or something.
Mother with daughters, right?
It's like, yeah, absolutely.
You shop here, right?
This is my daughter's favorite stock. It used to be Disney when they were younger, but then as they grew up, I killed their interest. We had to keep them interested in the stuff they like. She will babysit for money to earn cash to spend at Ulta. So, it's a win-win there.
Why don't you get her to babysit for money to buy Ulta, cash flow off it, and then buy makeup?
She does. She's got that. She also likes to spend her spending money. So half of her money goes to her savings. It goes into her account. The other half she can spend as she wishes. And Ulta is paying for college, basically. So,
I like it a lot, actually. I think that's really awesome. First of all, it's a good lesson in life, especially when you're teaching your kids or whatever, anybody out there. Well, what companies should you invest in? And invest in the companies that you're already interested in. My buddy, Steve Andrus, who all you guys know very well, he always says, you guys have been doing market research your whole life, right? What products, what services, what companies do you have good experiences with? Go start researching some of those companies. Now, it doesn't mean they're going to be an instant buy just because you like their product, but it's always a good jumping off point, Emily. I remember you did one of the coolest videos I'd seen in years with your son a couple years ago, maybe last year, and he was just talking about all the stocks he likes to play, right?
Yeah, it was a snow day, and I had to put him to work because it was driving me crazy. So we analyzed things that he likes and bought him some shares on paper money.
Yep.
One
more, then we're done. Activision, Cody, the gaming stocks, Blizzard,
Activision. Oh, look at that breakout
earnings
of that neutral channel. Yeah, broke the 50. But we have earnings coming up. This is one of those irritating ones that it's been stuck in this range for since December. So almost an entire year it's been stuck in this neutral range. Finally broke above it today. And according to our rules, we can't even touch it because earnings is less than 2 weeks away.
We've got a basketball team here. We got 5 traders on the Zoom channel now because Mark just joined us. Tim, Cody, Noah, Emily, and Mark. Emily, you'd be the point guard. You'd be the one dishing to everybody, doing the assist. I like it. Mark, what do we got going on at Tackle Trading? I think that's probably why you popped in here.
That is why I popped in here. We have Cash Flow Club tonight. We're going to continue our conversation from last week. Right now, we're doing a little mini series where we're going over the modules of the Tackle 25. Tackle 25 is the covered call system created by the coaches at Tackle Trading. And then we're going to continue what we did last week. Last week's webinar, I just absolutely loved, because after we went over the module, which we spent about 15, 20 minutes on, going over those basic concepts, we analyzed individuals' covered calls trade and started developing, what are some scenarios, and when you hit resistance, when you hit this, these scenarios that were not hypothetical happening to individuals in real life covered calls, and develop some trade ideas and some systems and some rules. And so we're going to continue that conversation. So if you're a pro member, bring your covered call trade, get ready to analyze it tonight. If you have any questions, that's what we'll be doing on the Cash Flow Club tonight.
Well, and then one other call to action. If you are a subscriber to our daily email and our blog, fantastic. If not, I just popped a link in the chat. Make sure that it popped in there for you guys. Last time it didn't show up, but just to our daily blog, we've got great writers. We've got Christian Sisson and Mark, and we have guest writers come in on Friday where we do a Friday feature. So it's the perfect day to start getting those daily blogs. Cash Flow Club tonight. Everybody, great job here today, guys. All right, we're done. We're out. We'll see you tomorrow.